What's going on, guys? Brian's here. Let's review a trade from Wednesday, November 6, 2024 on the market at all-time highs right here. There was an opportunity to take a bounce trade right at this level. I want to review some of the things in which I was taking a look at and why this is a good trade setup you can add to your playbook. This is the trade right here. It was the retest of the 2 sigma level. Now, in this case here, if you're not a quant trading app member, don't worry about if you don't have access to this 2 sigma level. If you have any significant level on your charts, let's just say it's a previous resistance level, let's just say you're using some sort of Fibonacci extension, or you have some sort of trend line, whatever your key level is, the main concept behind this is momentum and a break and retest. So in yesterday's case was the result of the US General's election. The market had gapped up and then it pulled in at the start of the day. So this already was the indication of which direction there was a lot of momentum. We had a gap up and price was up over 2% across majority of the indexes. That means the Nasdaq was also up, the Russell 2000 was up, the Dow Jones was up. Some of the major tech stocks were also all up. So the market was firing on all cylinders. You're going to generally have the morning session. Traders will be taking some sort of profit, and that's usually what's implied within the first 30 minutes of the market. This right here is 10 a.m. Eastern time. So the first thing to take note of is the time frame. This is exactly around 30 minutes after the market has opened. There's generally also going to be some sort of catalyst around 10 a.m. You will often hear about the 10 a.m. reversal. This is because there's usually a bunch of catalysts at this time. It's also the first 30 minutes after the morning session has ended, and the first shift of traders may be taking a break. Opening drive, momentum-based scalpers are generally going to take a break at this point, and then you will get the next shift of traders that will enter into the market. So we often get reversals 30 minutes after the market opens. Knowing this is a tremendous edge because then you can just wait for some sort of confluences, and that is the important thing to take away here. If you can list at least 3 reasons to take a trade, or you see 3 confluences around a significant strike price, you generally have yourself a decent trade. In this case, one of the important confluences would be this 2 sigma level here on the SPY. Again, this level comes from quant trading app, but even if you don't have this level, you can use any other key significant level on your chart. This level is calculated at the start of the week from Quant Trading App's proprietary algorithm. We copy and paste the script into our Thinkorswim platform or our TradingView platform, and this level remains stationary throughout the week. That means before price gets here, we already know this is a significant strike. So that means as the market opened yesterday, traders can sit back and wait to see how price will interact once it gets down to this level. I also want to point out that the tick had reached the exhaustion level right around this time frame. And then over here, I just wanted you guys to see the SPX 2 sigma level as well as this level. That's pretty important, as we'll touch base on this later as the highest positive gamma strike for the SPX. But for now, let's head back to this 3-minute time frame, as this is my preferred time frame for momentum intraday scalps. Let's turn on the studies just so you guys can see all the levels on the charts. And for the studies that are currently on my chart, we have VWAP, which is the one that ships with just about every charting platform out there for traders. We have the 9 EMA. We have the quant trading app scripts here. The index one you guys can ignore. That's for the SPX. We're taking a look at the SPY. So all we have is the intraday and the weekly scripts on my charts. If I were to turn off all of the studies again, you guys can see every level is being plotted from the scripts. And this is a stationary line. It is not dynamic like the 2-day anchored VWAP or like the 9 EMA, which means before price action gets here, we already know where this level is. What's important here, or where the confluences line up, is as the market was selling off, it came right down to meet this 2 sigma level. And at the same time, this is when the 9 EMA caught up with price action. This is why I like to leave the extended hours turned off on at least one of my charts for when the market is open, because I want to see how much momentum was there in the gap. And we'll often find that after the initial reversal, reversal earlier in the day has exhausted itself, it usually lines up with the 9 EMA. What I mean by that is the momentum carried price action to the upside, but from an intraday trends, the market was trending down intraday. That intraday selling momentum slowed down right at this point. Next, what do we get? We get a candle. It's not quite perfectly a hammer candle, but we do see a reaction off of the 2 sigma level, which is off of the 9 EMA. We get a wick, we get a bounce almost instantly. Price does not sit down at this level for a while. For a scalper, this reads to me as an opportunity to get long with a stop loss right below this candle. If price action was to break down below the 9 EMA, break down below 2 sigma, and close below this wick, that is my stop loss. The targets on the scalp trade is going to be your standard VWAP. If you are getting long below VWAP and you're a day trader, you're generally going to target VWAP. Same thing if you have multiple reasons to be shorting and price is all the way up here, you're going to be shorting with your first major profit target as VWAP. That's common intraday day trading rules. Beginner traders generally should not even be going long below VWAP, as it is interpreted as if price is below VWAP, then bears are in control for the day, and if price is above VWAP, then bulls are in control of the day. But obviously, those are general beginner-friendly rules. Once you have a foundation for yourself as a trader, you can obviously know which rules to break and which ones to follow. But for the most part, this is a universal concept here. At the 10 a.m. reversal, we have a key strike. We have the 9 EMA coming up to price after a massive gap up, and then we see a rejection off of the level almost instantly. A trend-based trader can then follow the 9 EMA and continue to hold the trade until price closes back below the 9 EMA. In the QTA, which is the Quant Trading App Discord, I just shared this for you guys here as at this point you guys should know this is the first retest of 2 sigma with Confluence for a scalp bounce, which means you're just scalping this trade right up to VWAP. It hit VWAP, profit target is hit, done and done. The longer term target for the day would be at 59.25. That's what we see right here on the SPX. So if you're holding a runner or anything like that, your last final take profit is all the way up here at 59.25. That is essentially as the SPY reached up to this level up here. And that's for any type of runner type position. We can see this is the bounce from here. Price action heads up to about where the SPX was hitting that high positive gamma strike. And that is a really nice intraday trade. You're just trading in the direction of momentum. You're not trying to guess. You're not trying to predict. You're just following the momentum. This is a massive gap up and we're over all-time highs, and there is a catalyst. It was the US general elections. You're just sitting back as a day trader being patient, and you're waiting for your signs for where do you enter your trade. The purpose of this video is to show you guys an example of things to look out for. Here it is, pretty simple. Retest of a key level, the 9 EMA catching up. We see an instant rejection off the level in some form of a candle that looks like a hammer. And if you need an additional confluence, look at something like the tick, maybe the ADD, maybe take a look at the QQQ to see if it also lines up. What does the gamma exposure look like around that key level? This is where you can add a 4th and 5th confluence or 4th and 5th reason to take the trade. But for the most part, if you're scalping, 3 reasons is generally all you probably have time to find, because if you wait too long to look for additional confluences past 3, you might miss out on a really good entry. Okay guys, the market is just open, so I'm going to wrap this up here as I have to move on with my day. Thanks for watching. Leave a comment down below if you learned something, like the video, and share it, and catch you on the next one. Oh, one more thing I do want to share. This is the 0 DTE gamma exposure for yesterday. Again, I have to be pretty quick because the market is open now, but I just wanted to show you guys this. This is 15 minutes after the market opened. This is what the SPX gamma exposure profile looked like. I like to always glance at something like this, and I usually need to see some sort of participation in calls, so by way of either volume or a lot of positive net gamma exposure at a higher strike price. If I'm looking for an intraday position trade, meaning I'm looking to hold for the whole day, if you're just looking to scalp it, you don't need to really see much of this, but this is an extra edge here to determine if you want to continue to hold the position a little bit longer. At this point, the SPX is below 900, but if it can get above 900, then there's reasons to think it might go to 925. If if you're looking to enter a scalp on that 2 sigma level, so this 2 sigma level right here was previous resistance, which is now acting as support. If you're looking to enter a trade here and then you're asking yourself, do I want to hold that position throughout the day? You generally will want to see something on the gamma exposure profile for the SPX to indicate that we might continue to trend higher. This is that right here, and then we can see as the day progressed, the markets did end up bouncing. It did reclaim that 900 level as it broke over 900. We're seeing participation up here. We're seeing a decent amount of positive net GEX at the next high positive gamma strike, and then we do see that the SPX obviously did end up trending, and it closed pretty much right around that key strike of 5925. Okay guys, I felt compelled to just append that to the end of this video, as I think it's hard for me to leave out gamma exposure. I was trying to do a video in which I didn't touch on gamma exposure, but again, it's just such a pivotal part of my trading and my analysis that I feel inclined to almost mention it, or at least show it in every single video. Thanks for watching guys, and I'll catch you in the next one.